This is an overview of the top charts and trends to watch in crypto and a weekly update on the latest at Token Terminal. Hey, it's Oscar here, and this week was a busy one. We released quite a few upgrades to the terminal that improve usability a lot, and a really important thing to note is that we also introduced some updates to the terminology for revenue-related metrics on Token Terminal. Previously, we had 3 revenue metrics: total revenue, supply-side revenue, and protocol revenue. To improve the accuracy of our methodology and avoid misunderstandings in terms of what revenue actually means in crypto, these metrics have now been updated to the following. Total revenue is now fees, as it showcases the amount of fees that end users pay. Supply-side revenue is now supply-side fees, showing the amount of fees earned by supply-side participants, so lenders, validators, liquidity providers, etc. And then protocol revenue is now just revenue, as it represents the portion of fees that the protocols capture from end users' payments. So revenue on Token Terminal is now comparable to the revenue metric in TradFi, both methodology and terminology-wise. The purpose of this update is to make a clearer distinction between protocols that have actual revenue and those where fees paid aren't captured by the protocol but go to supply-side participants. As an example, we have MakerDAO that captures all fees paid on the platform as revenue for the protocol, which is comparable to revenue in traditional finance. Whereas for something like Uniswap, where fees paid by end users accrue entirely to liquidity providers, the use of the term revenue in an economic model like that could be a bit misleading. But yeah, do check these out and let us know if you have any questions or suggestions for further improving things. You can always reach us easily via Discord, to which there's a link in the description. So some big updates there. The terminal is becoming clearer and easier to use every day, but the most exciting thing this week was the launch of a completely new leaderboard. We've been listening to your requests of some more simple views, so here you go. I proudly present the earnings leaderboard. This showcases the earnings for projects over different timeframes, and by earnings, I mean revenue minus token incentives. If this number is negative, a project spends more on token issuance than it earns in revenue. And I'm biased, but this is definitely one of the most interesting metrics to track in crypto at the moment, and with this table, we wanted to make it nice and easy for everyone to dig in. So make sure to navigate over to that and take a closer look. And keep the feedback and suggestions coming, because we're always listening. We also published 2 new episodes of 15-minute fundamentals with both HOP protocol and Perpetual protocol. Listen into those for the latest on HOP and Perp. What a week, and I'm just getting started because we also updated our newsletter format entirely. So here's a video overview of the 5 charts and trends worth keeping an eye on. You can always read the text version of our newsletter from the link in the description. There's recently been quite a bit of discussion around Uniswap's protocol fee switch, as the current situation is such where all fees paid are allocated entirely to liquidity providers, while Uni token holders capture no revenue from that. A discussion on Uniswap's governance forum currently proposes to turn on the protocol fee switch on 2 pools for testing purposes with different take rates, which would allocate a portion of fees paid to Uni token holders. Now, simplifying things quite a lot, we put together a what-if chart showing how Uniswap would rank in terms of revenue if they activated a 15% revenue share. By looking at the past 90 days, we can see that Uniswap would have been the 5th most revenue-generating protocol in Web3. Worth noting here is that in terms of total trading volume or transaction volume, Uniswap outranks DYDX, Synthetics, and OpenSea, which are ahead of it on this chart. But even with a 15% revenue share, which is larger than current governance proposals, Uniswap, the protocol, would capture less fees paid by end users. This is a good example of how we view the difference between a protocol and a company. Protocols will most likely trend toward a minimum viable margin, as visualized on this chart, while companies, in the traditional sense, tend to be more rent-seeking and have higher fees. And then, related to our newly launched earnings leaderboard, we put together a chart showcasing the relation between revenue and token incentives for major lending protocols. You'll find that with the time horizon being since launch, token incentives paid greatly outweigh fees captured for all except MakerDAO. What this means is negative net earnings for all projects except the crypto central bank. MakerDAO's most active month was May 2021, when it earned a total of $13.6 million in revenue. And while token incentives are one of the main expenses for decentralized applications, typically used to drive user adoption, this chart is not an indicator of profit in any way, as it does not take into account other expenses, such as team salaries, etc. And do keep in mind that this chart showcases development since launch, and many protocols have later cut down on the amount of token incentives paid to users. For example, Aave has shut down certain liquidity mining programs this year, which has significantly reduced token incentives paid. You can dig deeper into the data on our new leaderboard, and make sure when doing your own research you click on projects and explore their full dashboard to understand the entire picture. An interesting trend we've been seeing is that Arbitrum-based derivative protocols have maintained high trading volumes despite the market turndown. From this chart, you can see that GMX, Cap Finance, and MUX protocol have maintained strong trading volumes, while the monthly trading volume on Optimism-based Perpetual protocol has decreased by $3.4 billion if we compare August this year to January. On Arbitrum, GMX is currently the leading derivative protocol with an average monthly trading volume of over $4.7 billion. MUX protocol launched on the 1st of August and reached over $400 million in trading volume within just the first 30 days. Then if we look at non-L1 Ethereum blockchains, so all chains excluding Ethereum itself, we can see that Avalanche and Solana are the top earners by some margin over the past 90 days. Despite the migration of GameFi activity to Avalanche subnets in May 2022, Avalanche C-Chain remained the top revenue-generating non-L1 Ethereum blockchain. This is then closely followed by Solana, the highest earning non-EVM chain. While Arbitrum typically generates less than $10,000 in revenue per day, it saw a large spike following the Arbitrum Odyssey event that granted users NFT airdrops. Polygon and Optimism are also neck and neck in terms of revenue. It is worth noting that of total fees paid, Polygon captures around 10% as revenue, while the same for Optimism is 20%. So total fees paid on Polygon are about 2 times those on Optimism over the past 90 days. And finally, we have NFT activity, which has decreased by over 90% year to date. Sounds pretty harsh. Now, in terms of trading volume, X2Y2 is now the leading NFT marketplace, closely followed by OpenSea and LooksRare. Do keep in mind, though, that there's a lot of reward farming going on which incentivizes trading, so what you see might not be fully organic. For example, X2Y2 is currently allowing users to trade NFTs for free by paying back all fees paid. Looking at LooksRare, it experienced explosive growth after its launch in January 2022, driven by a total of over $700 million in Looks token incentives paid out. They've since been struggling a bit to maintain organic activity, and we can see that in terms of all-time earnings, LooksRare is sitting on a $322 million loss. Outside of these, Sudoswap has grown rapidly since the launch of its royalty-free fractionalized NFT marketplace in mid-July this year, having attracted over $30 million in trading volume in August alone. And there you go, some charts and trends to keep an eye on. I hope you found this valuable, and make sure to head over to tokenterminal.com to create a free account and dive even deeper into the data. I'll see you next week.